Welcome to People in Profit, the high-flying business show. Coming up, long haul and low cost, but can airlines make money with transatlantic fares as low as €100? We'll be speaking to the boss of Norwegian Air. A bumper year on the stock market, so we're looking at the big investment wins of 2017. Plus, China's capital of Christmas, the city that makes 60% of the world's decorations. First up, though, with fares as low as €99 for a transatlantic flight, long-distance travel has never been cheaper. It's a market that's attracting many of the traditional carriers like Air France and IAG, which owns British Airways and Iberia. They're trying to get in on the act pioneered by the likes of Norwegian Air, one of the trailblazers in this sector. That airline's seen a huge expansion in recent years, going from 68 aircraft in 2012 to 144 this year. In the past 12 months, passenger numbers have risen by 14% to over 32 million. But that rapid growth has come at a cost. Since 2012, debts at the company have soared to over 18 billion Norwegian krone, or around €1.9 billion. The airline's most recent results also showing unit costs increasing by 6% in the third quarter. Let's go to Oslo now and speak to the Chief Executive of Norwegian Air, Bjorn. Mr. Kjos, thank you very much for speaking to us. How have you managed to pay for this rapid expansion of Norwegian Air?
Well, we have a huge short-haul operation, of course, besides the long haul. And we have been into this business for 15 years now. And we have been positive on the revenue side, and we have made earnings since the last 10 years. So that's why we have been able to do what we are doing today.
There has been some concern expressed about the level of debt that Norwegian has. Are you worried about that?
No, actually not. I'm not worried about that. Actually, the last year we have reduced our net debt by 3 billion. And that comes out of the fact that, yes, we are taking in a lot of new aircraft, but we are also phasing out old ones.
Tell me about the drive to bring down costs. They've gone up recently, but it's something that you are trying to reduce.
The thing is that next year, or actually next half year, we will take in 10 more Dreamliners. And of course, take as an example the pilots. There are no qualified Dreamliner pilots out in the market, so we have to train them ourselves, and we have to front load a lot of these pilots. And of course, that adds a lot of cost before you start actually flying in the aircraft.
You have some new competitors in from Air France, for example, their June airline, and from IAG as well, the new Level airline. Are you worried about this increased competition in your segment of the market?
No, actually, the fares in the long-haul market have been very high. And it is much the same as it was in the short-haul market in Europe. We had very high fares before airlines really started to compete. And now we see that the airlines are starting to compete, and that then it's a lot more passengers that are able to travel. So one should embrace actually competition.
Is your company financially able to manage if oil prices were to rise sharply?
That is the best, actually, then we have the best asset you can find in the market, because we have brand new aircraft that is very, very efficient on fuel. So when the oil prices rises, that's where we are on the winning side.
You're offering very low fares, sometimes under €100 for a transatlantic flight. Are those fares sustainable in the long run?
But remember that those fares are from, first of all, they are opening fares, and that's on the narrow body across the Atlantic, where we fly from secondary airports into secondary airports in the US. So that means that we can fly on very low cost, and that is the reason why we can offer also the passenger low fare.
You have a healthy rivalry with Ryanair on many subjects, including recruitment of pilots. Are you going to be able to, do you think, take advantage of the recent problems at Ryanair in terms of pilot rostering?
Well, we had the same problem actually last summer, so we know that's not a good way, not a good area to be in. We had shortage of pilots, but fortunately we have been able to recruit a lot of very good pilots, so will not be in that position next summer. Everybody, if you are in shortage of pilots, the ones that are hampered are actually the passengers, and they should never be hampered.
You've a big expansion planned for Argentina as well. How big do you see that market becoming?
I think Argentina is one of the world's most underserved market. Argentina is, I used to say, it's a hidden jewel. So when people start to discover Argentina, you will see a lot of tourists going into Argentina on holidays. The problem today have been that there are extremely high fares from, as an example, from Europe into Argentina. And Argentina also domestically have been underserved with fairly high fares. And you need to actually fly in Argentina because there are so incredible long distances to travel.
OK, Bjorn Kjos, Chief Executive of Norwegian Air. Thank you very much for speaking to us. Now, next is Donald Trump playing the role of Santa Claus for the markets this year. Stock markets do tend to rise in December, and in particular in the final 2 weeks. It's called a Santa rally, but this year, market watchers say the Republican tax reform in the United States is driving the gains. Well, nevertheless, it's been a record year for many markets. Brian Quinn's been looking into the details. Brian.
Well, 2017 was indeed very kind to a wide range of investments, with major Wall Street indexes turning in a banner year. The Dow Jones Industrial Average up over 25%, the S&P 500 coming in at around 20%, the tech-heavy NASDAQ turning in almost 30% of growth for the year. That's of mid-December. All three indexes regularly touching new records, the Dow even setting a record for the most record closes ever in 1 year. Among the highlights, the U.S. tech sector, it up 40% over 2017. Apple topped $900 billion in market value, with Amazon and Google parent Alphabet shares each crossing the $1,000 mark for the first time. European indexes racking up gains as well, with the Frankfurt DAX adding a solid 15% on the year. CAC 40 here in Paris up around 11%. London's FTSE 100 index, though, has lagged behind its global peers, adding less than 5% over 2017 as Brexit uncertainty weighs on UK equities. While 2017 saw oil prices firming up their recovery from lows in 2016, it was clean energy that outpaced its fossil fuel rivals for the year. The Wilder Hill Index of 40 renewable energy companies outpacing the S&P's oil and gas production index by a wide margin. But if there's one asset class that stood out in 2017, it was cryptocurrencies. Bitcoin started the year at under $1,000. By mid-December, each unit of the digital currency was worth nearly $20,000, within days that dropping back below $17,000. The advent of trading in Bitcoin futures contracts on two major exchanges has added to its legitimacy, but many analysts continue to see it as a bubble waiting to pop. As the year-long rally that was 2017 draws to a close, investors are wondering, how long can it last?
It's a good question we'll be keeping an eye on in 2018. Thank you very much, Brian Quinn. Next, move over Strasbourg. A city in China is staking a claim as the capital of Christmas. The city of Yiwu, some 300 kilometers south of Shanghai, is a global leader for manufacturing decorations. Its products are shipped around the world, as Lauren Berstecker now reports.
Santa's workshop does exist, but it sits thousands of kilometers away from the North Pole in mainland China. If you've bought Christmas decorations in the past decade, chances are they came from Yiwu. Garlands, baubles, and of course tiny Santas. Here, some 50,000 shops sell everything you need to dress up your tree.
We sell our products in the US, in South America, and in Europe, especially France. We sell them everywhere. Most of our business comes from exports.
Around 60% of the world's Christmas decorations are produced in Yiwu, even if Christmas isn't considered an official holiday in China. The Yiwu market has been open since the 1980s, and some say this is where the Made in China phenomenon started. Here, over 600 factories and workshops produce Christmas decorations all year long.
This is the main material we use. It's plastic, which we mold with this machine to make the baubles. Then our employees manually take out the extra parts.
The factory is capable of producing 50,000 baubles each day.
This is the painting stage. We apply 4 layers of paint, then we let it dry for 10 to 15 minutes.
Business is booming, and orders for these baubles have risen by 20% this year. The factory employs 200 people and pays them around 360 euros a month, slightly more than the Chinese minimum wage.
These are the samples for the products we export to France. A bundle costs 3 euros to produce, and we sell it for 3,40 euros.
In France, these bundles cost around 8 euros. And if Yiwu is facing increased competition from e-commerce giants, the city still churned out over 2.5 billion euros worth of Christmas decorations this year.
And it's on that festive note that we'll leave you. If you'd like to contact the programme, you can do so on Facebook at France 24 Business, or you can tweet me at NewStephen. Until next time, thanks for watching.
You might watch France 24 in English, but don't forget, France 24 is also broadcast in French, Arabic, and Spanish.
Muy buenas tardes, bienvenidos a las noticias de France 24.
Available on cable and satellite systems and online media in France and around the world.